Right. Hey, just making sure you cancel that balance, right?
This is Alan Bush with ADMIS with the Financial Futures Forecast for Tuesday, May 19th. Now, starting out with the stock index futures, we did see some new historical highs in the overnight trade in both the S&P and also in the Dow futures. Also, we did have housing starts coming in better than expected. Also, we did have building permits stronger than the estimated report was likely to be. So, better economic data. Also supporting stock index futures today was news that the European Central Bank is now front-loading its quantitative easing program. So they will be buying more bonds during the rest of this month and also in June, and potentially buying less later in the summer months. So this has the effect of adding more stimulus, which is likely to go into equity markets. So for a couple of reasons, stock index futures advancing today. Also, longer term, we do believe that the main trend is still higher for the indices, and this is a trend that will probably last for most of this year, if not the entire year. Moving over to the foreign currencies, seeing strong gains for the dollar index. However, gains in the dollar, we believe, is not related to anything fantastic happening here in the U.S. with just the housing starts report coming in better. But the dollar was actually a lot stronger before the housing starts report came out. So dollar gains, I would think, almost entirely related to external factors such as the ECB with their front loading of their quantitative easing program. Also in the European area, we are seeing weaker German investor confidence numbers, that also hurting the euro currency. Also an apparent lack of progress between financial talks with Greece and its Eurozone creditors, also being a negative. So sharply lower euro currency prices. Also the pound lower after a report showing inflation numbers in the UK coming in at a 0.1% decline, and this is the first negative number since 1960. And the commodity currencies lower, the Canadian dollar and the Australian lower as dollar strength, putting pressure on crude oil prices, and that in turn putting pressure on the commodity currencies. All of these moves that we are seeing in the currencies, I think, are likely to only last for another day or so. Longer term, the dollar index will probably work lower. So any strength in the dollar index, I think, should be used as a selling opportunity. Any weakness in the commodity currencies, the Canadian and the Australian, should be used as a buying opportunity. Now, moving over into the interest rate markets, some pressure developing with the housing starts report coming in better than anticipated. So that hurting the long end, but the short end holding up very well, as it still appears that the Fed will be very slow to raise interest rates. Our feeling is that they will not be able to increase the Fed funds rate until 2016, even though the consensus view is that the Fed will raise that rate in the fourth quarter. So I would concentrate on the long end, on the short end of the curve. I think that is where we are likely to see gains continuing, but I would avoid the long end since there is some inflation to some degree with recent increases in commodity prices, I think, being a factor for the long end. So I would trade the short end from the long side and avoid the 10 and 30-year issues at this time. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.